Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Friday, November 14th. Well, markets did pull back as anticipated on our analysis from yesterday. Real quick, I'd like to run down the numbers. Dow Jones down 74, S&P down 9, and NASDAQ down 21. So we got a nice little pullback, and it was basically an orderly pullback. Still, again, kind of bullish. We do have some mixed signals that are continuing to kind of frustrate a lot of players here. However, we did get a nice down day. Futures were up in the overnight session about 3-4 handles, and we're coming into a certain area of support. So don't forget, this is if you took a short trade for the day, you did well. It is a counter trend trade, so your stops need to be diligent, and you need to adhere to your stops, only because you could get stopped out rather quickly. And if you're a type of guy or girl that is just a little stubborn, you can really take a beating on your account. So just want to make note of that. But I wanted to go over charts, and again, I'm going to keep it really simple again tonight, guys. But what I wanted to show you from yesterday is a 5-minute spider chart. And what I do is I always use a 15-minute opening range rule. In red, I have my opening range, top and bottom. And what you see here is our moving averages. And here's our this is a 60 period EMA, but I use this it's a 20 period on a 15-minute chart. So I times that by 3 and I get a 60 period. So it kind of gives me an idea where order flow is going. Really simple to use. You don't have to have too many charts open. So as this day, we started the day with an up and down on 15-minute chart, really inside day. We rallied up into this area of resistance, and we had a reversal candle on a 5-minute chart. Now, this could have been an easy objective to take short right here below the break back into this opening range with a stop right above here. That would have been your first safe area. If you decided that you needed to wanted to wait until we get broke out of the range and really get that true trend, what you would have done was right in here was your second entry, and here would have been a little pennant or even a little bit of a wedge, if you could. Not a wedge, excuse me, a little bit of a flag. And right here, we'll break below this flag. Next candle, you would have been short, and you would have probably rode that most of the morning and into the afternoon. So again, nice analysis. We do have some bullish setups that are still out there, and I'm going to show that to you as well. I also want to break down Apple. I want to show you where Apple is, and what am I looking at here, just for a quick analysis on Apple. So here's a 5-minute chart. So now let's go to some of our indicators like we always talk about. And this is the NASDAQ record high percent index. Now remember I said we always get that down, that followed by 2-3 weeks of a down. And this is repetitive here. You can see this. Now it hasn't happened yet. We did roll over today a little bit. So that's something that we're going to just constantly keep an eye on. And I want to take a good look at this thing on a regular basis. Now the VIX is going to get me really interested. A break above 17.5, break above 18, and then obviously a break of this consolidation here at 1950, 1940 if the market does sell off. As we get closer into options expiration next week, and we get to the following week will be Christmas and New Year's, I don't see it actually happen. So this could be the last little pullback that we have. And believe it or not, if it's a day, it's a day. The markets were not fearful. The VIX did spike up, but I don't think that's going to happen, or maybe we get a little bit of a follow-through tomorrow. But I think 1 to 3 days, like I mentioned yesterday, that's pretty much going to be it. 1400, 1410, that I think is the extreme. Maybe a little follow-through, a little more to the downside. But other than that, I really don't see this, at least right now, at this time. Now, again, things can change, so keep that in mind. Let's take a look at copper, and I wanted to show you copper. Here is a copper chart of the daily chart of copper. Now, as you can see here, this is broke back into this area and trying to challenge the highs. And we're just sitting here now kind of consolidating. This is actually very bullish as we consolidate from the 365 to 370, call it, and then we break up higher. We will probably challenge the highs here. Now, on the weekly chart, which I do not have for you tonight, but on the weekly chart, as you can see, well, you can't see it, but if you would look at a big, large symmetrical triangle, again, putting that symmetrical triangle can break down and or up. So, and it's a weekly chart, so we'll take precedent over a daily chart. So again, we want to keep monitoring where copper is going because it is a leader in the indexes that we follow. Okay, CPC, I wanted to show you the put call. Again, bullish. We're down below here. Haven't really spiked up, so we're still in this bullish category. So very quiet pullback. There was a little bit of movement this morning, but really kind of quiet. And another reason why is dollar actually had a little bit of a bounce. You didn't see that because they sold off a little bit at the end of the day again. But dollar had a little bit of a bounce here, and that's something that I'm going to really keep close eye on. Is what the dollar's going to be doing. Okay, so let's break these down here and let's get right into the charts. Now, here's the S&P daily chart, and we had our reversal candle. We had two topping tails, right? And we did break down below. Another outside day. Now we had we had a reversal candle yesterday. This candle gave us confirmation that the market is headed lower. We are at the 50-day moving average, so we can bounce for another day and then maybe sell off for another 1 to 2 days. So we're going to let the market prove itself that we are headed lower. I would use extreme caution. We are in a trend that we are trending higher for now. So again, any shorts is counter trend. If you're day trading, again, different story. But just please keep that in mind. If we do break the 50, I think the next area would be that 38% retracement. As you can see, that lines up nicely with the 20-day moving average on the Spider daily chart. And if you see, we have a little thin zone right in this area. So if we break this 20, you're going to probably flush back down to that 23% retracement. I don't see it happening, though. I don't see that happening at this time. But again, anything can happen. Wanted to just show you quickly that S&P, that bearish rising wedge. But what I did was, and as you know, the 30-minute chart shows an inverted head and shoulders as well as the 60-minute. This is a 60-minute S&P cash chart, and it's the same as the spiders. We have a left shoulder here, we have a head, and we have a right shoulder. And could this pull back to that right shoulder and then bounce higher? Absolutely. So keep this in mind. We do have a bearish rising wedge that broke down, but the bigger picture here is an inverted head and shoulders. Again, bullish. And we're into the seasonal time of the year where we're going to get that January effect, which usually starts early and earlier every year into the end of December. So just keep that in mind. Okay, let's go into take a look at IWMs. And this one really was telling me yesterday how risk came off really hard to me that the markets were more than likely going to probably take a little breather. And especially when you had that reversal with the Fed, that just kind of gave me a hint that we were going to sell off a little bit. And sure enough, we did, as you can see. Broke the bearish rising wedge. And even if we get down to this bottom cluster area here and hold the 50-day moving average and then roll back up and even try to test these highs back in here, again, would be bullish. Okay, so just, again, keep that in mind. And Apple. Let's talk about Apple. The last chart will be Apple. Again, really simple analysis tonight, guys. Big, large, very large head and shoulders pattern formation, bearish pattern, neckline measures from here to the top of the head, believe it or not, to 339. Is it going to happen? Nobody knows. But I want to make this pattern clear to everybody. It is a big bearish pattern, and it only is validated on a closing basis below it. And usually, if something like this were to happen, it would break lower, back test the neckline, and then really start breaking down. Now, it's not going to just flush down to $339. It'll probably go in 5 waves in a choppy formation back down to this area, if it were to happen. And even then, when you have a lot of people seeing the pattern like this, it usually doesn't happen. So just keep that in mind. I'm not trying to scare anybody. I'm just letting you know that there is a big pattern out there. And if you look at the weekly chart, you'll see how frightening it looks. It looks like it's hanging off a cliff. Here's the weekly. Here's that long-term uptrend line that I was telling you about, right around 468. Probably be the first test, and then a bounce, and then probably flush down to this area here at 339. As you can see, look at how far this thing actually went, and then really capitulated here with this reversal candle, this doji star right up above. So keep an eye on it. Apple, to me right now, if you're going to trade it, it's a day trade only. I would not be holding this stock. You do not know what's going to happen with Apple, and I think that you have some serious consequences if Apple doesn't rebound shortly, because there's a lot of people still holding it, and there's a lot of people thinking that the Apple is going to rebound, and I hope it does rebound. But once it rebounds up into this area here, this larger area, this 600, 620, I think you're going to have large amounts of sellers come out in the woodwork to get out of that stock because people are trapped in it now. And if we get a big flush to the 467, mark my words, that 515, that 505 low here, there's a ton of stops below 500. When we break below 500, it's gonna be intimate to see that we're gonna see 567. So just keep that in mind, guys. Be real careful. Don't get stubborn with the stock. If you're trading it, that's one thing. But if you're swing trading it, it's I couldn't even tell you to buy puts on this thing right now, only because we're down here at this area. We really need to see how it reacts first, if anything. All right, there's our analysis for Friday. Very quiet, but let's see if we get a little follow through with selling. I want to wish everybody a good and relaxing weekend, and we'll see you back here first thing Monday morning. Have a great day, everybody.